Big news, guys. This is Stacy, your local South Florida realtor. I am coming to you today to talk about the breaking news that is hitting news stations all across the country. And in case you haven't noticed, the Fed spoke yesterday, and for the first time since March of 2020, y'all remember that time? Right when COVID was peaking, economy, government, the country as a whole was going into a little sense of panic. They lowered the federal fund rate. Well, they did it again yesterday, and it was widely speculated that they were going to lower the federal funds rate by 1/4 point. And shocking to some, not to all, but shocking to a few, they actually lowered it 1/2 point. So what does this mean? Let's talk about this a little bit because it's exciting. Of course, on the surface, it is what so many of us have been waiting for because rates have been stupid high for the last 2 years. It was back in the summer of 2022 that they increased the rates a lot. And it affected everything from auto loans to credit card interest rates, and of course to mortgages, what I really am here to talk about. We saw rates go from, 2-3% to about a year ago at this time. It shot up to over 8% for a small amount of time last fall. But as of yesterday, they lowered the federal funds rate by 1/2 point. So what does this mean? Well, first thing I want to talk about is that the federal funds is not mortgage rates. I'm going to say that again. The federal fund rate is not mortgage rates. What it is, or what it does, is it has a way of influencing mortgage rates. Jerome Powell, my goodness, that is one powerful dude. Just think about this for a minute. Can you imagine being Jerome Powell, that every time you speak, the markets wait on bated breath to not only interpret what you're saying, but interpreting how you're saying it and trying to piece together what this means for the future. So there have been talks really since the first of the year, really since fourth quarter of last year, that the feds were going to lower the rate. And based on plenty of economic data, it sadly did not happen. Inflation has still been seemingly out of control. The employment market seemed strong. The stock market's been super strong. So they really just held the rates steady. They didn't higher them. They didn't lower them. About this time last month, there were some economic reports that came out a little less than stellar. And they really said it's likely going to be time at the next meeting, which was held yesterday, that we're going to have to lower rates. Well, what the mortgage market did was they were able to interpret that, and they were placing bets on the fact that they were going to be lowered, and they baked that into mortgage rates. And if you've been shopping for a home and you've been keeping your eye on what mortgage rates have been doing, great news is they have come down significantly. At the beginning of the summer, we were seeing rates a little over 7%. Now the national average, I'm not saying this is what everyone's getting, national average based on mortgagenewsdaily.com is sitting at 6.17%. So it's come down quite a lot in just the season, in the summer. 1 percentage point is tremendous. What happened yesterday, contrary to what many thought would happen, is the feds lowered their rates. We now have a range, a Fed fund range of between 4.75 to 5%. But mortgage rates actually ticked up a little bit. And I think people were kind of surprised about that. They thought that mortgage rates were going to come down 1/2 point. And sadly, that's not how things work. They are two completely separate things. Mortgage rates follow the 10-year treasury. Bonds started trading a little differently when Jerome Powell spoke, or after Jerome Powell spoke. So actually what we're seeing now is mortgage rates tick up ever so slightly. It's nothing significant. What's important to keep in mind is that rates already for mortgages came down quite a bit just this past month. We're probably going to see a little bit of fluctuation between now and the end of the year. Keep in mind, it's an election year. There could be some political undertones here. We probably won't see much movement in either direction, would be my prediction for the rest of the year. But the commitment that the feds have to continue to lower rates albeit we don't know how much that's going to be or when the next time will be, but we're seeing a downward trajectory. We will see more movement, I do believe, come the first quarter of 2025. So that's all great news. It's great news just that they lowered in the last month. But thinking that we're going to see this tremendous change just between yesterday and today, it actually went and did a little bit of a different pivot. Nothing to be wildly concerned about. It was small at best, but something to keep in mind. So if you have been on the fence and you have been thinking about making a move, rates are really good. You can save several hundreds of dollars by purchasing right now than you would have if you purchased 3 months ago. I mean, to the tune of several hundreds of dollars per month in a savings. So if you've been on the fence, now is a great time. It can always be a great time when you find the right house, a house that you can comfortably afford and doesn't leave you house poor. But in terms of rates, if we're figuring it just on that, they really are a lot lower. What some unintended consequences could be by lowering this rate, and something I want you to all sort of think about, not a lot of people are discussing this yet, is real estate at its core is a supply and demand issue. Always has been, always will be. What has kept prices high the last 2 years have been the fact that there's very little homes for sale. And the reason there has been very little homes for sale is that many sellers had what's called the golden handcuffs. They have been essentially handcuffed in their homes by the grace of their 2-3% rates, that for them to move and give up that rate and potentially get that 7-8% rate didn't make any financial sense at all, especially if they want to move up and not move down. Now that rates are falling, that could potentially bring buyers to the market, yes, but what that will also do is bring sellers to the market who will then want to become buyers and start to flood the market with inventory, which we need. Don't get me wrong, we need more homes for sale. But that's something to keep in mind if you're selling. You may want to get one step ahead of the curve, because I think a lot of people are thinking that. Also, when we see rates come down, I'm not an economist, I'm not a politician, but typically it's because the economy is softening. Something to be mindful of. Lots of people may not be able to buy, even with the lower rates, if they're afraid of losing a job, have already lost a job, can't afford insurance, can't afford taxes, multiple different reasons. So just something to be mindful of. I think we're going to see a slow change in the market, but a much needed change in the market. And I stand by what I said earlier. The best time to buy a house is when you find the right house to buy. Thanks for watching. If you like what you're seeing, please be sure to subscribe, and I will see you next time.